Hello again, everyone. Welcome to the review and the analysis for the upcoming week. Uh, this week starts um, tomorrow, which is going to be February 18 and runs up until February 23rd. All right, so before we begin, let's just pray. God, just thank you again for another opportunity to trade, another opportunity to just go over concepts and strategies for the upcoming week. Pray for anyone watching this video. May they have a successful week and may we continue to be successful as we develop our own strategies and as we continue to practice and to be consistent. Thank you again. Amen. All right, guys. So let me just jump right into it. I'm going to share my screen. A couple of things that we are looking at for this week. I'm actually looking at for this week is Monday is President's Day in the United States, so the trading hours will be affected. The market should open as normal tomorrow, Sunday at 6 p.m. However, because of the shortened trading day, it may close at 1 p.m. on Monday and then reopen as normal at 6 p.m. Monday evening, Eastern time. So bear that in mind. Um, this event may also affect volume. There may be increased volatility, so definitely pay attention to that. All right, so let's just jump right into it. Now, last week, as you know, the market NASDAQ 100 has been an historically bullish pair. What that means is that any sells that you see in the market are usually only temporary, which means they sell in order, to form the higher low that is needed on the bigger time frames. Okay. Now, the the thing that you have to note is that when you're taking sells, you have to be extremely cautious, not to get sucked into the market, not to get hypnotized by the market, so that you think that the sell is going to last longer than it really does. All right. So if you look at last week, for example, there was a big sell starting on Monday and it went all the way down until Tuesday. Okay. A lot of people actually thought this was going to be the sell of the century or whatever it was, right? However, it came down, it made a low on the 1 hour time frame, which was essentially a higher low that was needed on the bigger 4 hour time frame. I think it went up to like the 6 hour time frame, the higher low that was needed. Now, if you look at your bigger time frames, you will see that they're still making higher lows, higher highs. So let's look at the 4 hour, for example. This was the sell on Tuesday, came down, made that higher low. Now, remember, the market is making higher lows, higher highs. Okay. Any sells that you see is really just for the big time frames to actually come down to make that higher low that is required. So if you look at your 5 hour, you'll see your 5 hour actually completed a higher low on Tuesday. If you look at your 6 hour, higher low. If you look at your 7 hour, higher low. If you look at your 8 hour, higher low. If you look at your 9, okay, all the way up until your 23 hour completed that higher low that was required. Okay, your daily did not give you a higher low. Okay, what that says to you is that there has been um consistent rejection for the market actually going down to continue with that sell. All right. So your 23 hour was the biggest time frame that completed a higher low. When you look at your 23 hour and you look at history, you will see that the 23 hour has been making higher lows, higher highs consistently. Higher lows, higher highs. There's one lower high that it made here, but it came back, made a higher low, and continued with a higher high. Okay, so higher lows, higher highs, which means naturally, if you see this higher low formed right here, okay, do not think that this market is going to continue pushing down. What you want to do is to trade your higher lows to your higher highs. If you get a lower high, like you got right here, This was back in Wednesday, the 10th of January. If you get a lower high right here, then you actually take your sells because all your time frames are going to be at some high point. So of course, you sell from your highs and you buy from your lows. But nothing like this exists right here. Right now, you're looking at higher lows, higher highs, higher lows. You're expecting that higher high to actually come up. All right. Now, going back down to the 1 hour time frame, you'll notice what happened here. This was the big sell for Monday into Tuesday, created that higher low point that we saw in the bigger time frames. Notice what the market actually tried to do afterwards. It went back to try and make a new high. It did not form a direct high. And this is what actually I know tricked some people last week. When it made this lower high right here, a lot of people are saying, okay, fine, it's going to come down and make a lower low. Okay, look what happened. Market came, it made a higher low. From this higher low point, it went up, it made a new high. That's a segmented high. Okay, what that did was that it created a lower high point on your bigger time frame, which is your 4 hour. So if you look at your 4 hour, this was the lower high point that was created right here. Okay, from here, we see that it came down, tried to make that low on Friday. However, it got rejected on Friday. Okay, because this is where the last candle closed on Friday. It did not actually push down to make that low. Okay, this candle right here, which was your 9 o'clock candle, your next candle, which was your 1 o'clock candle on the 4 hour, failed to actually close below it. Okay, all right, so that's interesting because the market actually stopped short of making a low on your bigger time frame. So it's still in that trend of making higher lows, higher highs. Okay. The point that I want to actually bring across right here is that the market is consistently consolidating between the last low and the last high made on your 4 hour time frame. Okay. Remember, higher lows, lower highs, higher lows, lower highs are consolidation moves. Okay. They happen in between the highs and the lows that were formed previously on the market. And we see exactly what happened right here. 2 weeks ago, on the 31st of January, you had that low, okay, on a 4 hour. Market went up, it made a new high, which was earlier on last week. This was Monday last week. From here, higher low needs to finish a higher high in order to finish the trend move. It failed to do that. It made a lower high. Came back down to make a new low, failed to do that, got some rejection right here, found some support right here. So you had another consolidated move. All right. So what I'm looking at for next week is, of course, like I said, my bias is always to trade the higher lows to the higher highs. That's the easiest trade that you can take on the market. Higher lows, higher highs, higher lows, higher highs. Market is a bullish market, which means those are going to be your safest moves. You just need to exercise some patience. Okay. The other thing is, of course, the zigzag theory. Those of you who have been following it and implementing it, take some practice to getting used to and everything like that. But the zigzag method never fails. Okay. Look at it. Zig, zag, zig, zag, zig, zag, zig, zag, zig, zag. Market does that every single time, never fails. Wherever there's a zig, there is a zag. Wherever there's a zag, there's a zig. Okay. So it's just a matter of being patient. Your trend moves are always going to be your safest moves. You just need to make sure that you wait properly in order to take your moves. All right. Let me give you a trick. If you really want to, if you really have the patience and the time to wait, look, a big time frame like your 4 hour time frame. Okay. If you wait for your lows or your lower lows, you can literally take a buy from any one of these and you can just sit and just leave that trade alone. It's a historically bullish market. You don't have to worry about the price coming back to actually take you out anytime soon. All right, let me show you what I mean. Let's say we took this low, okay? This low here on Friday the 5th. Look, stayed in this trade all the way up here, still in profit, okay? You can leave, go on vacation, come back, everything, you're still good. If you took this lower low right here, same thing. If you took this low right here, same thing, okay? So if you really have the patience and you really want to trade long term and you really want an easy trade, just look at your 4-hour time frame. Take your lows or your lower lows. All right. Your biggest time frame, just take your lows or your lower lows. When you take your higher lows, okay, there's a chance sometimes that you may suffer a hard retracement and the price will come back to break a previous higher low. It's okay. It's still making higher lows, higher highs. But when this happens, it just means that the bigger time frame needs to make a higher low. So of course, this previous higher low would have to be broken so a new low can be formed, which is going to be your higher low on your bigger time frame. Well, let's check this out. So if I took this tool right here and I marked right here, okay, this is on your 4-hour time frame. Let's check some of your bigger time frames. Let's check the daily, for example. So if you look at your day, okay, what you'll see here is that all the way up to the day, it did not register anything. However, let's look at another big time frame, like one step down, like the 23-hour. Look, there you go. You have that higher low here on your bigger time frame. Okay. What this tells you is that the trend is actually very strong. So the market is not interested to come down to make higher lows on your, your daily time frames or anything like that. Okay. Right now, it's really pushing towards the upside. All right. So that's just a little point for those of you who have the patience to really just sit and you just really want to get in on a trade and just leave it, not having to worry about it. Start with your bigger time frames, take your lows or your lower lows, and then just stay in those buys and you can leave it historically. Let's look at even the 23-hour. We're on the 23-hour time frame. Let's say you took this low right here. Okay, here's a low. This was on the 25th of October, 2023. If you took this trade right here on this low, you could have been in this trade right now and not having to worry about anything. All right. Case in point, let me tell you, just give you an idea of how many pips we're talking about. Now, of course, if you day trade and if you understand how the market moves, you can actually maximize your pips and everything. However, if you just want to do a solid investment, just have a nice trade, just going and everything like that. Okay, you took this low. Let's see how much. Using my strategy, $250. Using a 25,000 divider. That would be the smallest trade. So let's say I came in with $250 on this particular day and I took this trade. That trade would actually be worth to me right now if I stayed in it where the price closed on Friday. Let's go right here. All right, so that would have been 35,725 pips. So that would actually be $3,572.50. If I took that trade using $250 from that particular day, that's a nice investment right there for me. All right. So that's just a little side note as to how to actually take those safe trades. Now, going back to this week, again, what I'm looking for, again, it's the consistent moves of taking those higher lows to higher highs. That's what the market is giving me. That's what I'm trading. Not interested in going for the sells unless, I'm taking those retracements. However, key to the retracement, I've always said this, consistently on a weekly basis. NASDAQ likes to take Mondays and Tuesdays to sort itself out, do its consolidation, do its retracements, and everything like that. Mondays to Tuesdays. After Tuesdays, you find the market starting to get into that trend, starting to trade the trend that is accustomed to trading. So it usually gets back into making those higher lows higher highs after Wednesday. Let's double check that. So on your 1 hour time frame last week, this is what happened on Monday. It made another historical high. Look at what it did. This is Monday. Boom, it did the sell. Probably about 5,000 pips. Okay, did the sell. Came here, made a higher low. Guess what? This is Tuesday. Look at what it did since Tuesday. If you got in on this low right here, you could have stayed in this trade all the way up until Friday and still be in profit. Okay, so Monday, Tuesday came down, finished all its consolidation and its retracements, and then it started to buy. All right. So that is pretty much what I'm looking at for most of next week. Market is still trending. It's still making higher lows to higher highs on your bigger time frames. So that's what you actually want to do. Again, remember, when you're doing those analysis, remember to always start from your bigger time frames. So I normally start on my month. Okay. On my monthly, I see that price is currently at a higher high. All right. That's where price is at right now, at a higher high on my monthly time frame. Okay. Go down again to my weekly. Price is currently at a higher high. It tried to sell last week. That was that big trade, that big drop that we saw last week, Tuesday. Now look at what happens. I'm going to just take this off so you can see. Actually came down, tried to actually get bearish last week. It got rejected, and so price started to go up again. All right, so if you notice, it finished with this wick towards the downside. Guess what? Price is not ready to go down. A similar thing actually happened the first week of January. Okay, price actually tried to sell. A lot of people got happy. Yes, we're going in for the sell. Look at what it did. Got that rejection, started to buy again. So 1 week of sell, 1, 2, 3, 4, 5 weeks of buying. 1 week of sell, expect some more weeks of buying because it finished with this rejection right here last week. This is a strong sign to tell you the market is not ready to go down as yet. It's still bullish. Okay. NASDAQ is an historically bullish pair. Do not anticipate the sells. Do not try to preempt what the market is going to do. Just take the sell, take the buys as you get them, trade what you see. It's making higher lows, higher highs. You cannot sell unless the market is at a higher high. This market right now is not at a higher high position. It looks like it's there from your weekly time frame. However, when you drop down to your daily, you'll notice it's still at that higher high. But if you notice, you still have that you still have some bearish activity which tried to get started last week, but what you ended up with was a number of days of consolidation. When you look at a time frame like your 4-hour, that gives you a clearer indication. Here you go. It's coming from that high. It's not at a higher high. It's a highest point that it's coming from, but you have a lot of consolidation in between this low to this high. So you have a higher low, which should go up and make a higher high. It didn't. It got rejected. Made only a lower high. Came down, should break this to form a new low. It didn't. It got rejected again on Friday. And you have this higher low point. So you have this consolidation that's happening in between the last high and low point. So it's important not to try to rush into those moves to try and preempt a sell which is not necessarily there as yet. All right. So just a couple of things to finalize this analysis. If you notice, I have my fibs that I've drawn here. From this last low all the way to this high on my 4-hour time frame. Notice price came right down to my 61%. NASDAQ is notorious. It likes to test. It likes to retest on that 61% or that 78.6% line. Came to 61.8%, got rejected, started to buy again. It came right back up into that 23% zone, got some rejection, tried to sell, came right back down on the 38% line. Now, the last thing I want to say is this. 38% is a very funny level to deal with. Price can shoot in either direction from the 38% line. So price can actually go bullish all the way. Price can actually shoot to complete this low by breaking this previous low at 61%. In that case, we'll be looking at a retracement going down to like your 78% line, which would actually be in tune with your support line, which would have been your previous support on your 1 hour, which is actually 173.70.6. Okay. If I drop down to my 1 hour time frame, you'll see here. Let's just see. Just want to make sure I have this here. Yeah, on my 1 hour time frame, this would actually be in line with that. This is actually the lowest point that I'm seeing on my 1 hour right here. This is actually my highest point, which is the historical high. Notice price has been consolidating since the last low right here, all the way up until the historical high. Consolidating, no clear break. So price has been trading within this range right now. So it's important. Remember, historically, NASDAQ is a bullish pair, making higher lows, higher highs. So you want to actually pay attention to that when you are looking for your opportunities. So what am I expecting for tomorrow? Okay, price with market open can drop to, retest this little wick that it left here on Friday. Okay, price can come down to your 50%. As well as price can continue to push down and break to form a new low. In that case, it's still a higher low because that high would still finish higher than this previous low. So it's still trading higher lows to higher highs, but you have to make sure that you watch to see what price is doing before you rush into the trade. All right. Key thing to remember, Friday, all time frames expired from your weekly down. So your weekly candle, if you look at your weekly time frame, let's see, where am I? Oh, weekly time frame. Here we go. I'm going to take these off so you can see. Weekly candle got rejected right here, finished here. All right. So the price actually finished higher than the lowest point of the week. The lowest point was right here at this wick. Price finished here, which tells you rejection, price got rejected, okay, started to buy up. All right. That's on your weekly. So what you really want to do is to understand that on your weekly time frame, you had a rejection. Price finished. The market closed on Friday. Your weekly candle finished. A new candle is going to start come tomorrow. All right. That's important. Okay. So what that means is that there's a reset in all your time frames lower than your weekly time frame. The monthly is not in effect right now because you still have 11 days left on the month. Now that's important. Although it left a week right here, the month is not finished. You can still have a situation where the candle pushes up to make a new all-time high. So that's important to note. Time frames that we're looking at right now is the weekly downwards. Weekly candle finished on Friday, had that rejection. Daily candle finished on Friday. Look at what it finished bearish. However, it still finished higher than the lowest point that it made 3 days before. Okay, so this was the low. This was the low of the week. But notice price has been consistently finishing for the last 3 days higher than its lowest point that it made on Tuesday. All right, going down to your 4 hour, that's going to become more evident. This is your lowest point that was made on Tuesday. Sorry, this would have been Tuesday. Sorry, right here, Tuesday. Okay, notice price has been finishing higher. Even although it came down to try and make a low, it stopped short on Friday with this higher low. So price has finished higher, okay, since Tuesday. Okay. Last time frame we're going to look at your 1 hour. Again, here we go. Price has finished higher since making that low on Tuesday. All right. So going into this week, I'm still expecting those higher lows to higher highs. I'm expecting that because price actually finished on a zag point, I'm expecting a zig point. However, this zag point, I need to ensure that it's completely finished before I think of taking my zig move, which is going to be my buy move. Remember, every time you have a zag, there is going to be a zig. And every time you have a zig, there is going to be a zag. The market has to do that. So that is one of the reasons why I have the zigzag theory. Like I said, it has made my trading so much easier. Understanding the fact that each time the market makes a zig, it makes a zag. Each time it makes a zag, it makes a corresponding zig. So I hope that this analysis will help you this week to improve on the trading process. And I hope that we all have a successful week and continue to practice, continue to, just pour into yourself just to, become consistent, zone out the noise, just focus and just do your thing. I mean, trading is easy, but it's hard work to actually learn and to learn how to be consistent. All right. So take care, guys. God, we just thank you again for another opportunity to analyze. We just ask for a special blessing over each of us as we trade this week. Grant us the success that we're all searching for. And may we continue to be, helpful to others and continue to be consistent in everything that we do. Thank you. We pray. All right, guys. Until next time, I will see you again. Take care. Bye-bye.